Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online video series here. We want to talk for the first time to Millennial Potash, and Farhad Abasov, the chairman and co-founder, is here with us. Farhad, good morning. How are you?
Good morning, Jochen. Great to see you. How are you doing?
Yeah, all fine. Thank you very much. Great to have you here again on board. And it's again Millennial Potash. We are used to the name Millennial because of Millennial Lithium. You made us all a lot of money. Thanks for that again. Because I always knew you're gonna make it. And I remember our first times with Alana Potash. You sold that also. That's like 10 years ago approximately. And yeah, I have a very good feeling that we're gonna have a lot of fun with Millennial Potash. So maybe you give us 2-3 sentences. What is the company about? Potash is for sure, but where are you located?
Yes, Jochen, good to see you again. And again, this is our third company, I think, together, meaning that you cover our third company now, Jochen.
That's right.
And you're right. Well, first was Alana Potash, then Millennial Lithium. Now we combine Millennial with Potash. So we got Millennial Potash. So look, we started with this project in February. So this is relatively a new project that we started in the potash sector. It is a previously explored project in Gabon. Gabon is in West Africa. And Gabon is probably one of the most stable countries on the continent and one of the most prosperous countries on the continent. And this project has, as I mentioned, has been explored in the past. So we know exactly what is in the ground. Our job is to reconfirm it and hopefully expand it further.
Okay, super. Yeah, I saw some historical drill results already in your presentation. They look to me quite high. Is my judgment correct?
Yes, Jochen. I mean, the really interesting results. I mean, what happened is that the first historical drill program took place in the 1970s. It was a French oil and gas company. They came in. Obviously, they were looking for oil and gas. They drilled quite deep in the southern part of our project. And they didn't find any oil and gas, but they intersected a lot of thick potash seams. And then in 2017 and 2018, another junior came in there and they targeted potash specifically. They drilled to the north of that area, about 20 kilometers from the original cluster of drill holes. And they started intersecting potash at a shallow depth of about only 230 meters. So just based on those 3 holes, Jochen, they put out a JORC-compliant resource estimate of 1.7 billion tons at 16% KCl. So when we saw that, we understood we already have a large resource here. The question is now we have to make sure that it's 43101 compliant, obviously by drilling and doing further work, and also drilling it throughout the entire project, or at least the southern part of this project that we know there is plenty of potash.
Super. So are you drilling right now? I think you do so. And how is it going? And let's say how many meters you have to drill, how many holes until you are 43101 compliant?
So Jochen, we've ordered a drill rig because we have a drill rig on site, but it's not a coring drill rig. So we need something that obviously will allow us to get cores out. So that drill rig is en route to the site. It should arrive sometime this month or early June. As soon as it arrives, we're going to start drilling. So the plan now is to drill the northern part of the previously explored area first, because that's the shallowest part, the lowest hanging fruit, so to speak. And we'll do that during summer, basically during the next few months, and put out the maiden resource estimate sometime in September or October. And then while we're doing a PEA based on the maiden resource estimate, preliminary economic assessment that is, we're going to move the drill rig to the south and start drilling the deeper horizons, because that's where we think the mother lode of potash is. And the plan is now to, after finish the PEA by the end of the year, early next year, and then finish the expanded or revised resource estimate by the end of the first quarter.
Okay, super. Well, that sounds to me quite fast. That means that you are already like on a path to production, I would call it. So what else is required? Like feasibility study for sure. But to me, the question is, how fast do you think you could bring this online? Just a guessing. I know it's a forward-looking statement, but is it like from here 2-3 years? Is it 5 years more the horizon? Yeah,
Jochen, so you know that we usually fast-track all our projects. So we want to really get to the point where we can make a production decision as soon as possible. This project is no different from previous ones. So what we want to do after we finish the PEA and after we finish the revised resource estimate is to start the feasibility study right away. So hopefully, in the second quarter of next year or in the middle of next year, we can start the feasibility study, Concurrently with the feasibility study, we're going to start on our environmental studies as well, because as you know, it takes at least 12 months to finish those. So we're talking probably the middle of 2025, so basically 2 years from now, when we'll be able to complete the feasibility study, our environmental studies, and hopefully be in a position to make a production decision at that point.
Okay, super. We are not going too far now, but just an idea what you have watched maybe already. What would be the production process? Is it like a brine liquefied process? Is it standard?
Yeah. So Jochen, you remember I mentioned very thick potash horizons. So we observe quite thick potash horizons in the south and quite thick as well in the north, but the southern part seems to have much thicker. We're talking about 70, 80 meter thickness in total, which is incredible because it will keep actually our costs low for obvious reasons. And I'll explain, what kind of, extraction method we're going to be using here. So because it's sylvanite and carnallite, we have two different mineralogies there. And because we're used to solution mining, we know solution mining very well, and solution mining is going to be very applicable in this particular case. We're going to use solution mining methodology. Now, our previous two projects, both Alana Potash and the Potash 1 in Saskatchewan, they were also solution mining amenable. And so the team is quite familiar, so that your viewers also understand solution mining method is well known and proven worldwide, but mostly in Saskatchewan and in Germany, actually. So there are three major mines extracting potash using solution mining in Saskatchewan and one in Germany. So we have very good understanding of the technology. So basically what it entails, Jochen, is you drill into the ore body, you pump a saline solution or saline or salt water into your ore body, you dissolve it, you pump it back up to the surface, you evaporate water, and then you go through processing, meaning you're basically taking potash out of the brine. Now, in our case, we're very fortunate to be on the coastal area of Gabon, so meaning that we don't have to worry about water situation, we're just going to pump seawater into the ore body. In many other places, you have to obviously go through the entire hydrogeological study to understand what kind of water resources you have available to you. And as you can imagine, it has a lot of permitting issues around it and so forth. Here, we'll be in a much better situation because we're going to just be using seawater. So that will also allow us to keep the operating costs low, lower than most, in addition to, of course, the thick layers that I mentioned. So this is going to be solution mining, and we know solution mining very well, and solution mining has been proven worldwide.
Okay, super. So you just said already you are on the coast. You said some advantages already. How does the overall infrastructure look like? Because as far as I remember with potash, it is large tonnage you have to move. So probably you need a port. You need, of course, electricity, roads. So what does it look like in Gabon?
Yeah, so Johan, we're very, again, fortunate that we're in Gabon. Just to give you a kind of insight into Gabon, Gabon is a relatively small population, about 5 million people. It is, as I said, on the West African coast. And the country is oil and gas country. So it's relatively rich. It's third highest GDP per capita country on the continent. So infrastructure in general in Gabon is well developed. Where we are, we have a little port about 40 kilometers away. But also there's another port, more kind of a mobile port or port specifically designed for mining operations or mining commodities, I should say, is being developed as we speak. So as we go forward, we're going to probably update our shareholders about the status of that port. So that port is being built not only just for us, but a couple of other mining projects that are being developed in that part of Gabon. So we will have access to the port. Now, the plan, as far as the entire logistics are concerned, is to actually build our processing facilities right next to the port. So instead of building it on the project, because remember we're talking about solution mining, so we're going to pump the slurry or brine up to the surface, then we're going to pump it, at least that's the conceptual plan right now, pump it through pipelines all the way to this port site where we're going to have all the facilities, the processing plant and so forth. So all of the work is going to take place there for two reasons. We're going to have all the power infrastructure there, meaning both natural gas and of course electricity. So it will be much easier to actually base all your processing plant and facilities next to the port instead of trying to build it on the project. So it will be a lot more difficult, obviously. And it will really make our lives easier because we're going to just ship it through pipeline to this site, and everything will be taking place near the port. And once the product is ready, obviously the port is right there, we'll be able to ship it out. Now, one other advantage we have here, Jochen, is that not only are we on the coast, but also once in production, we're going to be the nearest supplier of potash to Brazil. Brazil is the largest importer of potash in the world, 12 million tons a year. But also remember, Africa itself is a large user of potash. We're talking about 2 to 3 million tons a year, and Africa has no production on the continent. So we think that our product will most likely be destined for Africa itself, of course, as well as Brazil.
Would that work on the same prices then, or would you have to give, let's say, a discount for Africa?
It's interesting. So we'll have a lower price for Africa depending on where it goes. But having said that, currently Africans actually do pay a higher price than, let's say, some other major markets, because they do not have the same buying power like, let's say, as India or China or even Brazil. So they do end up paying higher price. Obviously, our price will probably be a lot more competitive than what they're buying today. And most of the potash today obviously is imported, and it comes from Europe, mostly from the Middle East, and sometimes all the way from Canada. So that's why we think we're going to be very, very competitive. And remember, proximity to your end market is actually important, because obviously quite a bit of your potash price exactly is in the shipping cost. So we think we're going to have a huge advantage. Now, not only are we going to have huge advantage, Jochen, vis-a-vis Africa or Brazil, but also we're going to be closer to India and China than most of the producers in the Northern Hemisphere. As you know, almost 85% of the production of potash production comes from the countries in the Northern Hemisphere. It's Saskatchewan, it's Germany, it's Russia and Belarus, and then in the Middle East, we're talking about Israel and Jordan. So we're going to be closer to India and China than most of these producers. And we're also going to be equidistant to the eastern seaboard of the U.S. compared to let's say, Russian or Belarusian or Middle Eastern producers. And that's very important as well. Because so that, again, your viewers understand, most of potash that half of the U.S. is using, let's say Midwest and West, comes from Saskatchewan. But it's much cheaper to buy potash from Europe for the eastern states in the United States. So we're going to be actually closer to the U.S. than, let's say, some of the European producers. Until recently, the eastern U.S. has been buying potash from Russia and Belarus as well.
Okay, so as we are talking already about world markets, what is your judgment for the next years regarding supply, demand? What is your feeling? Because you are so long in the potash business. If I remember that correct, you were also involved in the Potash One takeover deal, right?
Exactly.
Yeah, so that's like, what is it, 15 years ago or something?
A long time ago, yeah. So I was involved obviously with Potash One, then of course ran Atlanta Potash. So and this is our third potash project basically. And remember, Jochen, it's the same team, which is incredible. We've been together for almost 17 years, which is very rare in this business, as you know. So we're very fortunate in that regard. So look, my view, I always take a very conservative view on be it potash or lithium or whatever we get involved with, because we want to make sure that the project is robust enough, especially the cost structure is robust enough to withstand any potential shock down the road. As a junior company, we have no control over the price, we have no control over any supply-demand dynamic and so forth. So all we can do is to make sure that we choose a project that can actually withstand or absorb potential shocks. So the industry itself has already seen two major shocks in the last, I would say, 18 to 24 months. First one, of course, the COVID supply chain disruptions. The price went from about $400 up to $900 per ton. It has come down quite a bit since then. We're talking about $450 to about $550 per ton right now in different parts of the world, and I'll go over it momentarily. And then the second major shock came in last year when Russia invaded Ukraine, and the EU decided to punish Belarusian potash industry because Belarus is obviously an allied country of Russia. So they singled out Belarusian potash and it got sanctioned. Now, the Russian potash is not sanctioned for some reason, but Belarusian potash sector is. But we think that some of Belarusian potash is still coming to the market, coming out to the market, I should say, through Russia anyway. But still creates quite a bit of constraint there. In terms of supply, or in terms of demand, I should say, it's been growing very, very strongly. Now, if you look at 2015, that's when we sold Atlanta Potash. Remember, Jochen, we had the interview at the time as well, and the world production was or supply was about 50 million tons, and they expected that today, around 2022, 22, and 23, supply or demand, I should say, will go up to about 70 million. Today, the demand is 78 million, which is incredible. Wow. It grew much faster, much more robust than people actually forecast then. And then today, we predict, the forecast that it's going to grow from today's 78 million tons all the way to 100 million tons of demand by 2030. Now, this is driven by obviously two major factors, Jochen. One is the population growth, the obvious one, so to speak. Last year we hit 8 billion people, so congratulations everyone. And and the second one is the soil depletion. So in many parts of the world you need now more fertilizers, including potash, than you've used in the last several decades. So that obviously contributes to the growth in demand. Now on the supply side, look, since again we spoke last, with the lineup potash, not a lot of new supply has come online. So a couple of new projects hit production in Russia. This was not by Uralkali. It was a new company called Urchem. Not new anymore, but as far as the industry is concerned, relatively new. And then of course your countrymen from Germany, K+S, who bought our Potash 1, they put that one in production, believe it or not. And they now produce 2.2 million tons using solution mining in Saskatchewan. So these, I would say, were major newcomers online. Now, K+S, of course, has been in potash business for decades, but as far as Saskatchewan project is concerned, that was a new project in the last few years. And a small production came online in Laos as well. Those are mostly funded and controlled and operated by Chinese companies. So other than that, Jochen, and overall, if you look at this new supply of potash, they're barely keeping up with demand. So that's where we stand. We think it's going to be pretty tight for the next few years, and that's what we'd like to see in the next 3 to 5 years. Now, I do not expect the price to stay around $500, $550 per ton. I think it will probably come down to $400, potentially even below $400 in the next 3 to 5 years. But considering what kind of cost structure we may have on our project, we'll be very happy to have between $300 and $400 price point.
So it means very low cost structure. Exactly. Because I know you always operate with a good margin.
Exactly. That is very important, as you know, Johan, because we sometimes get caught in the down cycle on the commodity price, and you want to make sure that obviously you have a robust project.
Great. We saw already you have assembled, as always, a fantastic team around you. We must not go now into detail because we are already talking 18 minutes. But last but not least, I want to talk about what is cash in the bank, because it all costs money, and who are your largest shareholders, and very important, what is management share in the company?
Yes, so I'll start with your last question. So the management, the board still own about 40% of the stock. So we are the largest shareholder.
And I'm a shareholder too, by the way.
Oh, that's good. Hopefully you'll make money on this one, just like in the previous two.
I did on all deals.
Yeah, exactly. So we are still the largest shareholder, and obviously we funded this for quite a few, and now in the last couple of years, I should say. And then in terms of a management team, we have we've reconstructed the same team, the team that did the Alana Potash, and we're bringing even potentially in the next few weeks or so people from Potash 1 as well. So it's going to be a really stellar potash-oriented team. A couple of names, Rick Lacroix. Rick used to be Senior VP of Potash Corp or Nutrien. He was in charge of operations, was also Director of Campotex, oversees marketing arm of Canadian producers. So he knows everything across the spectrum, from operations all the way to marketing. We have obviously some folks from Millennial Lithium as well, so it's a well-integrated team now. And our CEO is Jason Wilkinson. Jason was our Chief Operating Officer with Alana Potash. He was the one who ran all the operations on the ground in Ethiopia. And remember, running project there, as you remember, Johan, was much, much tougher than running the project in Gabon. Yeah. The location was quite challenging. In terms of cash, we resumed trading in February under the name of Millennial Potash. So as soon as we started trading, we got quite a bit of inbound demand. So we wanted to do a quick $2 million raise, but the demand was higher than that. So we upsized it to $3.5 million. So we raised that. So we got close to about $3.5 million in the bank right now. So that will allow us to proceed with all the drill program and then a PEA and so forth. We also have 2 tranches of warrants. Jochen, one is with exercise price at 60 cents, the other one at 75 cents. So once they are exercised, we think that will bring in, it will bring in about $6 million into our account as well. So in terms of financing in general, we'll keep it quite opportunistic as usual. We see that the market is doing well, the stock is responding well to the news coming out. Then and we see quite a bit of demand. We'll raise capital at that point as well.
Okay, super. Well, that sounds like a good game plan to me, Farhad. Thank you very much for your time. And I have a good feeling that we talk very soon when you have then the first drill results out. We want to see what's going on there.
Yes, we will.
That is great.
Well, it's exciting times right now.
Absolutely. Super. I would say keep it going. As said, I'm a shareholder of the company. I think we're going to make, again, a nice amount of money like we did with your last company, Millennial Lithium. Keep it going. Thanks a lot. And we talk very soon.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Farhad Abasov, the chairman and co-founder of Millennial Potash. Yeah, you heard it. Potash is, again, hot, of course. We need fertilizer. This world needs fertilizer and food because we are growing and growing with more and more people on this planet. And also, as Farhad alluded to, the soil is getting, less quality. So we need to use potash, and you know what I like with the product is you cannot recycle it. Once it's used, it is used. And this is something, potash has to be produced every year new, and you heard the market looks great. Demand supply is still not in balance, and that is fantastic for prices. As Farhad is really conservative, we love that, of course, because this is how you run companies. And I would say, check out Millennial Potash. I'm a shareholder already. Maybe you will be soon too. I have a very good feeling that we make, again, a fortune. Thanks for watching us, and bye-bye from Switzerland.